Hello, folks. Welcome back to Getting In, a College Coach Conversation. We just had a great first segment where we talked with Beth Heaton all about how she's supporting her son through the application process. And one of the things that she mentioned near the end of our segment was the role of finances and the cost of college. And she might find that if Jack gets into a school, that she might have access to a tuition payment plan. And we're going to talk a little bit about what that looks like. And to do that, I've got my colleague Michelle Clifton here from the college finance team joining us to talk all about it. Hey, Michelle, how's it going?
Hi, Ian. I'm doing great. How are you?
Doing really well, having a good show so far, and it's going to continue, obviously. So I want to talk about these payment plans. We are currently sitting right about in the middle of June. And is this about the time that families start to think about payment plans, or does it happen a little bit closer to the start of the first day of classes?
That's a great question. This is actually the perfect time to be talking about this because payment plans are opening up right now.
Okay.
As far as the earliest side of things, there's different timelines, but yeah, this is great timing.
So let's talk a little bit about this just in general for people who might be unfamiliar. I typically would look and see what the cost of college is. It's listed for a full year price. My intuition is that we split it into two segments. You've got one semester, you've got a second semester. You write two big checks and it goes to the school. Tuition payment plan seems to suggest that it's something different. So what exactly is it? What do the structures of this look like?
Yeah, exactly. So instead of doing those two large payments, it gives families the option to pay in monthly installments. So rather than make those two large payments, it will be there's a couple different ways they do it. So there could be shorter plan options like 2 to 5 months for one semester at a time,
Mm-hmm.
or there could be annual plans. A lot of schools have annual plans, so you have to think about the full year cost,
Mm-hmm.
and that's usually split up in 6 to 10 months. 8 and 10 months are the most common I see. And in
Gotcha.
that case, usually the first half of the payments, so if it's a 10-month plan, the first 5 payments go towards the fall, and then the last five go towards the spring.
10 payments made monthly. So that would mean that there are 2 months that you are not making payments. And then
Mhm.
is it typically an even division of the cost? So if I'm paying $50,000 for tuition, then I'm paying $5,000 each month on a 10-month plan.
Yeah, that's typically how it works. You can sometimes do uneven splits if you need to, if there's certain costs that are in the fall that are in the spring, like health insurance or,
Okay.
the enrollment deposit can put a wrench in things because that's
That's
only
right.
credited to the fall and, lots of different moving parts, but it can be exactly the same or it can be different for each of those months.
Those fees add up, don't they? I mean, you look at
Yeah,
this huge bill and it's like, and then you've got the student body fee for
right.
$700 or whatever. And it's like, okay, stop. All right, but payment plans I think can help make this a little bit more manageable and also just help with planning a little bit.
Mhm.
Is this something that's universal that every college offers? And if not, how can families figure out whether it's available to them?
Yeah, almost every college that I'm aware of offers some sort of payment plan. But the way to really make sure you know what plan is available to you and how to set that up would be to reach out to the billing office. So that's probably a new office. You probably haven't reached, if you're an income family where, your students just starting in the fall, you probably haven't talked to them before. You've
Right.
probably talked to admissions, maybe financial aid, but there's another office that does billing, and they can sometimes be called student accounts, sometimes the
Mhm.
bursar's office, sometimes student
Mhm.
financial services, sometimes they're within financial aid, sometimes they're with the registrar too, sometimes they're standalone. So lots of different pieces there, but finding out what that office is key. And then they'll have information, by calling them or reviewing the tuition section of the website. And a lot of the billing offices, although they administer the plan, they will actually use a third party payment plan provider to actually collect those payments. So you might be directed to a separate website to actually sign up for that plan and make those monthly payments.
Gotcha.
So this is the time of year where those payment plan providers either probably already sent out a notification or they are soon, where they'll kind of give you a heads up that this is a plan that's available to you, and that can I found that it can provide some confusion for families families, because they think that once they get the notification, they think, oh, this is the only way I can pay.
Yeah.
And they aren't aware that they can wait until, August to make a payment if they want to. But it is a really great way to spread out the costs. And the sooner you set it up can be the better, because sometimes you can start in June, other times you can start in August. And obviously the later you start, the higher those payments are going to be, because there'll be less months to use.
Gotcha. So, I just bought a car, and one of the options with the car is to think about financing and how that cost of that car can be spread over time. But financing obviously comes with a rate where you are paying some form of interest on that payment. Is that something that we see with these college payment plans? Do we have to be aware of some sort of rate that we're paying in order to spread that cost over the year, or is it going to be 0%?
Yeah, so they usually don't charge interest, but they will very often have a one-time enrollment fee that could be like $35 to $60 is kind of the average. On the higher end, if it's an annual plan, lower end, if it's a per semester plan. But at each time you set up one of those monthly payment plans, you're going to pay a one-time enrollment fee. So that could be 4 times over the course of 4 years or every semester.
I'm sort of curious why a family might elect to do this, right? So I mean, obviously, like there might be some form in just sort of saying, all right, we've got a certain amount of income, and so we need to divert that income each month towards this payment along with our savings. Are there advantages associated with different kinds of college savings accounts that are connected to this payment plan in terms of how you withdraw funds? Anything that maybe I'm not thinking about in terms of just basic, like I've got my pool of money and then I've got my income and I'm drawing from that to pay tuition?
Yeah, I used to tell families that it's not going to give you a lot of extra time, because oftentimes you're starting before the payments even due, but it really is a good budgeting tool. So, a lot of families will see that large tuition cost and just be overwhelmed and end up maybe borrowing a large loan to cover the cost. And they're not thinking about, oh, maybe I can afford to pay $500 a month or $1,000 a month. And that can bring down how much you're borrowing. So a tip that I have for anyone who's planning to borrow a student loan or parent loans is, trying to estimate the overall cost that you think you'll borrow over the 4 years, and do a quick loan calculator or use a quick online loan calculator, Bankrate, studentaid.gov, NerdWallet, anything. Estimate what your monthly payment's going to be after your child graduates, and then see what that monthly payment's going to be, and try to think about, as a family, can we pay that and start paying that now and set up a payment plan for that amount? That way you're tackling the cost now and not just waiting for everything to, waiting to pay later. So you're reducing the interest that you'll pay over time and the debt that you'll take on.
And that makes a lot of sense. Is sort of like, as you're thinking about all these different pieces coming together and contributing towards this total cost, how do you chop that up in a way that there's just something psychologically that feels a lot different about a monthly payment versus
definitely.
Yeah. Now, there are obviously blended families, different sorts of circumstances, divorced and separated families. How does this work? Like if you are having multiple people that are paying into the cost of college, can you set up multiple payment plans? Does it have to be one? What does that look like?
Yeah, usually that you can have, more than one parent set up their own separate plan. Okay. It can be a little bit confusing. So I do usually recommend doing it a slightly different amount for each, so that you can differentiate on the student account which one's for who. Okay. But most schools are fine with that, and they'll process it accordingly.
That's great. Sounds like colleges really want to get paid, and so they're trying to make this as easy as possible. Yeah. Okay. That's the bottom line in a lot of these cases. Now, anything else that families should know as they're thinking about these payment plans? I mean, whenever I hear about something that is structured like this, it just feels like almost a no-brainer that you would do it. Obviously, you're mentioning that it starts a little bit sooner. Mm-hmm. Maybe you're expecting that bill to come later. But is there anything else that I might want to consider as I'm, weighing the option of a payment plan?
Yeah, so I'd say one common misconception is that families will sometimes avoid payment plans in general because they think that they have to set up the entire balance through that. So say if it's a family that owes $40,000 for the year and they think, oh, I can't pay $4,000 a month, I'm just not going to use that plan. But you actually can, say if it was a 10-month plan. So a lot of times this is coming from multiple sources of funding. So you could set up a plan. So say you could do $2,000 a month.
Mhm.
That's half the cost there. Say you have a 529 plan and you can take a $10,000 distribution for the next portion, and then maybe you can do a loan for the rest. That type of thing. So you don't have to cover the full cost through a payment plan. If you have, if grandma's making a payment by the due date, you can account for that.
So you can combine sort of lump sum payments along with a payment plan that then covers the difference.
Yes. Yep.
And those
Absolutely.
lump sums can be made in the form of loans. They could be gifts from relatives. They could be come out of a savings account. That's really interesting. I think we often don't think about, it's like, all right, well, how am I going to chop this up? It just seems so large, but thinking about multiple different funding sources coming in is really helpful.
Make it a lot less daunting.
When you say loans, is that like loans that are coming from private sources as opposed to a financial aid package from a college? So if a college says, we're going to give you these loans, how does that fit into the payment plan? Is that that covers that portion, and then you've got the remaining balance?
So if you're using the loans that are, the direct loans that are on the financial aid award letter anyway, a lot of times you're taking that out initially because you're, if you have scholarships, other financial aid, you're kind of calculating that in advance. But if you need additional funding, then you can also apply for a separate loan that you can then use to reduce the amount of the payment plan too.
That makes sense. Now, as with everything else in college, and especially around college finance, we're not just talking about 1 year, we're talking about 4. When I start up with a payment plan, am I obligated then to pay in that same way for all 4 years, or do I have an opportunity to refresh my options every year?
Yeah, no, it's a year by year, even sometimes semester by semester basis. So if it's not working for you, if all of a sudden halfway through you need to cancel that plan, or if the next year you don't want to do that again, you don't have to. You can always work with the school. I used to work in student billing, so I was adjusting payment plans all the time. Whether it's to increase it, decrease it, cancel it. And on an annual basis, you can totally reassess your options.
That's great. And for those of you who are watching the video, you on the podcast can't see this, but we've got another college coach child here on the show today.
Yes, please go downstairs.
So this is part of the working from home life, and people just get a little insight into that for you, Michelle.
Oh my gosh,
it's fine. I hear Legos upstairs, so I don't know if that's making its way to the podcast either. This is really great. I think what I'm hearing is that it depends who you need to talk to from college to college. It's always great to keep that communication open. That's something that I hear from our college finance colleagues all the time, and it makes a ton of sense. Is there any other parting wisdom that you would want to give to our listeners?
Yeah, I would just say, if you need help, especially where payment plans are usually starting before the fall bill even comes out. If you're just like, I don't know how much I should set this up for, call the financial aid office. If you're getting financial aid, call the billing office. I used to spend a lot of my summers helping families figure out what their estimated balance was going to be before that bill came out, so that they could make their payment plans, or could get those set up. And they're happy to help with that.
Wonderful. I love it. And I mean, that's like college finance professionals are happy to help. It's like,
totally.
I think it's a ubiquitous sort of characteristic across the group. Michelle, thanks so much for coming and introducing this to all of our listeners. Folks, make sure that you ask these questions as you start to think about paying for college in the fall, and congratulations on the start of your student's first year of school. When we come back, we're going to talk to Julia Jones about how to set up some different task lists for the summer. So you won't want to go away.